So it started. Okay. So we have solved the question one. Do you have any issue? And I okay.
No,
I have adjusted the answer. Remember? And have you got the issue? Have you got the answer that how I adjusted that answers? Or you need
no.
me to explain to you?
So can you explain it for me a little
Yeah,
bit? Oh,
yeah, yeah.
just a quick review.
Yeah, sure, sure. So here we have adjusted the cash flow amount reported in cash flow. Remember, I told you that there are basically two types of cash flows are involved. One cash flow is
Yeah.
involved at the start of period at the present value, which is called the present value, and second cash flow is the interest expense that is paid on a regular period. For example, in our example,
Oh,
the interest is paid on every 6 months on 6th of June,
yeah.
on 31st December. So every 6 months you are paying interest. The issuer pay interest. So that's why there are two types of cash are involved. So one is interest, which is cash interest. Another one is the present value of the future amount of the face value. So that is the financing activities. Okay.
Oh, okay.
Why it is
Okay.
financing activities? Because we have took a loan. We have took a loan from the borrower, sorry, from the lender, from the bondholder. Okay. And
Okay.
in the next question, the requirement was, just hold on. Uh, Requirement, maybe this is one. Yeah, this is one. See, I solved the present value of interest with the number you told me, but then I solved it with my formula, the formula of ordinary annuity. Okay, so with the formula of
Oh,
ordinary annuity,
present value ordinary or the future value?
no, present value
Oh,
of annuity of interest, because
okay.
we cannot take the annuity of principal. The reason is we only receive principal for one time and we pay only for one time. So we pay
Okay.
interest on a regular time period, regular payments are being made. So I don't know what is the issue in your table, or maybe you have taken or 4 digits or 5 digits decimal places. So that's why, because you see there is only a $5 difference, not a major difference. 106 117, our answer was 106 112 122. So there is only a $5 difference, but still there is a difference because it is the interest. So $5 still accounts for, because it is a computer, and computer maybe will not accept the answer other than inputted in or programmed in the answer sheet.
Okay.
So that's why I applied my formula. So then the answer was correct. Should I explain you the formula?
Okay.
If you are unable to do this, you can use it by the formula. Formula is very simple.
Okay.
Should I explain you?
The formula?
Yeah.
Yes, please.
Okay. Sure. Just
So we already did these things on chapter 5, but we didn't study the formula. She just gave us the tables.
yeah. But when the class is end, or during the class, please send me the table as well so that I can see, because maybe you have taken four decimal places. Maybe you have taken,
Yeah.
you did not have taken full decimal places, because in what you
Okay.
have to do, whatever the written. Okay, please can you send me the table as well, in just 1 second, 2 seconds.
So you you are already on my profile.
Yeah.
Okay. Um. So I thought I have to receive a push, but that's fine. So it's on my here and the page. So can you go to California State University East Bay website, please?
Where?
Our university website. Our university website.
Yeah, this is your university website is open. This is like,
Oh no, yeah, this is the homework. Don't close this one. But Can I send you a chat?
Uh, just hold on.
Yeah, I think here. Wait, I'll send you.
This one, like this one, what it is? This is the present value.
Oh,
No.
this is the book.
Okay.
I'll send you. Just give me a second.
Okay.
So go to this website. I send you in the chat. Oh, and then properly chat.
Oh, you sent on Prepo chat.
That's fine if you couldn't. So I'll send you on WhatsApp.
No, the Preply's chat is very slow.
Okay, okay.
No, send on WhatsApp, please. Yeah.
I did.
Okay, so the link you sent me yesterday, right?
It's just yeah, California State University East Bay. Yeah, this link. Yep. And go to three lines. Yes. And then go to Blackboard. Sign in to Blackboard. Login. Send me a push. Okay. And and then go to class accounting 312. All there are six tables. All six tables are in the. Go to accounting 312.
Yeah, it is one, two, four. Yeah, which table should I open?
No, no, no. It's no, no, no. First, go to the class intermediate accounting. Yes, in this class,
Now.
and then go to course materials on the left. No, no, no. Click that arrow.
Okay.
Arrow under the three lines. Yeah. Uh, Go down and go to course materials. Yeah. Can you see tables? Six tables here.
Yeah. So
Yeah, these are the tables.
which is the table for annuity right now?
For annuity,
Present value
I
of
already.
annuity.
So, so there's two annuities. One is ordinary annuity and one is annuity due. So which one do you want?
Ordinary annuity.
Okay, it's table 4.
Okay, this one. So we were at 2.5%, right? Here the interest rate
You
was
can
two.
there's a something that you can click. The table is getting like fixed. How to say it?
To
It's
rotate or
opposite.
yeah, to
Yeah,
rotate.
to rotate. There's an option above on the top.
Okay, no worries.
No, no, not that.
I don't know where it is the option.
Can you go a little bit down, please? I'll show you.
Yeah, it's already I have opened it.
Oh, but for me there's an option. Okay,
Okay, no
maybe
worries.
the
I will.
computer is different, but that's fine.
No, no, I opened it on a different website. So we have a 2.5% annuity and the time this is 8 years, so 7.17014. But this is the same you told me. 7.17014. 0.014 times 14,800. Okay, so it is 106,118. 118. Just let me see that if 118 works or not. Then I will tell you that you have to use your table or not. 106,118. Yeah. Okay. So yesterday maybe you haven't give me the complete number. I don't know what is the issue.
Oh,
Maybe there was a problem. So what you all have to do, you have to go to the table. Just identify as
okay,
the rate in this table is 7.17014 times the interest rate, which is 14,800. So this is equal to
okay,
118. Sorry, 116,118.
okay.
Okay. So return to question.
Let's go to the next question,
Yeah.
please.
Question 3. Now,
Okay.
can you please solve this, or
No,
have you solved this? Have you tried to solve this?
no.
Okay, solve
Today
it.
I didn't have time.
Okay, no worries.
Okay.
Solve it with me. It's very quick. It's a very easy.
Yes. Honest. Let's go and solve it together. So I'll repeat all of them for the exam.
Okay, I'm with
So
you.
the I is 8%.
Yeah, and I is 8%. Okay, but how the bond is using, how the payments is made semi-annually.
Oh,
So
okay.
so
Yeah.
remember, this is
So
not the
right now
I.
it is 8, but then
This is not I. This is coupon. Coupon.
oh,
You can say it is I, but do not use this I in the calculation of present value. Remember, always remember. Always remember, this is a rule.
okay.
Only calculate the present value or future value. The interest rate that is used is market yield.
Okay.
So it is
Okay.
8%. So effectively it is 4%.
Coupon.
And we have market
Okay.
yield.
It is 10%.
It is yeah, it is 10%. So effectively it is 5.
10%. So divided by 2, it's gonna be
Yeah, at
5%.
5%. So we need the price of the bond. Number one requirement is price of bond. Price is equal to the, can you tell me the formula of price? Price of bond?
Price of bond. I don't remember.
Yeah, you okay, repeat with me. Do not forget. Remember, present value of principal amount
Okay.
plus present value of interest amount.
Effective rate.
No, no,
Oh,
present value of interest amount. We will use the effective interest rate in the calculation of interest amount. So what we need now, we need the
oh,
present value of interest. How we will calculate the present value of interest? 750,000 multiply, I can calculate it directly. It's you
okay.
can go to the table of present value of normal present value, which is standard present value. Simple, then multiply. So it is 1 divided by 1.04, 1.04. The power will be here 8. Why? Because the maturity is 4, so eventually it will be 8. So it is 0.73069. What is the standard? Your examiner is using 5 digits. So 0.73069. 069. Now, so I will multiply here 750,000 times the 0.73069. It is 548018 plus the present value of interest. So I need the annuity, ordinary annuity. I will go to the table here. So at
The
5%,
table is as well on the screen.
yeah, this is the annuity on table. Okay, I have gone to the table. So it is 5%. We
Okay.
need 5% at year three. So this is year three. This, this, and this. So it is 6.46321. So what I will do, I will multiply the interest with 6.46321. 46321 multiply interest. Now we have to calculate the interest. How will you calculate the interest amount? The cash interest. How will you calculate? Tell me.
Cash interest. Um, I don't remember.
You don't remember anything? Please don't do this. Okay, no worries. First time it's okay. Mm, okay, so you will multiply the stated amount. I will write the formula here again so that you can see stated amount. What is stated amount? The principal value, the par value, the face value.
Yes, probably.
So multiply by with the
Effective
coupon in
rate.
coupon interest. Yeah, please. What you ask?
I said effective rate.
No. Remember, if you want to calculate the cash, I have written here. If you want to calculate the coupon interest, the coupon payment, this is basically called in if you have a financial calculator, this amount is written as PMT. In financial calculator, this is called PMT. What it is? This is coupon
Okay.
payment. This is called annual coupon or semi-annual coupon. So the other name for cash interest is coupon. If they ask you that calculate the coupon amount, what you will do? You will multiply stated amount with the coupon interest rate. Remember,
Coupon rate.
coupon interest
Interest
rate,
rate.
coupon rate is only used in the calculation of cash interest. However, the market yield interest rate is always used in the if you want to calculate the present value, the future value, then what will you use? You will use the market effective interest rate. So remember one thing, that because it is very important,
Okay.
if you do this opposite, the answer will be obviously totally wrong. So be careful that
Yeah.
if you want to calculate the present value, either the present value of principal, either the present value of interest amount, what you will use, which rate you will use? The market rate, market yield, effective rate. But if you want to calculate the amount of cash interest, what rate you will use?
Cash interest.
Yeah, what rate you will use? I have written in front of you. It is written.
Can you repeat, please? Which one?
Yeah, if you want to calculate the cash interest, how will you calculate? What is the
Okay.
formula?
Is stated amount multiplied by coupon
So,
and coupon interest rate,
yeah, good. So here the stated amount is 750,000.
or the face amount is 750,000.
Yeah, the name is same. Either the face amount or stated amount.
Yes.
Multiply with the 8%. Now, here
So I
the
think it's
sorry.
4%.
Yeah, it is actually 4%. That's why I'm telling you that it's 4%.
Yeah.
Give me the answer. 750 times 4%. So it's
Wait,
30,000.
please. The one 30,000.
So what we will do, we will multiply 30,000 times 6.46321. So it is 548018 plus the interest amount is 193,896. So this is the present value of interest. This is the present value of principal. What I will do, I will add both of these. This is equal to the bond price.
Add them. Okay, determine the part.
So it is seven
Okay,
four one 741,914. So I will put the answer here one by one. So here the N is 8, the interest is 5%,
5.
the interest amount is 30,000, the principal amount is 750,000, present value of interest is 193,896, 193,896, and the present value of principal is 548,018. Okay, check.
I wanted to say something.
Yes, please.
Uh, the way you are teaching is so good, but actually today I didn't listen the I didn't watch the rewatch that video that you already posted
Mm-hmm.
because I didn't have time for today. That's why. But I before exam, so tomorrow 100% if I alive like so
No,
I will
may you will
watch
alive.
both videos.
Okay, okay, okay.
That's why whenever you say I just forgot, because our professor said in accounting everything is by practice. If you
Yeah, everything
practice
by
a lot,
practice.
like she said, you can practice one
Mm-hmm.
question 2 and 3 times,
Mm-hmm.
then it will be easy for you. And
Just,
yeah, that's why I didn't watch the video.
okay, just hold on. There is a problem in the present value of
But I
principal.
opened it in my computer.
Okay, 1
Yeah,
divided.
I know all this you are saying right now. We already learned it yesterday. So
Yeah,
yeah,
no worries, no worries. It this will be again the revision of you. So multiply by, so just
yeah.
hold on, 1 divided by 1 point. It is 5. Just hold on. Uh, Return to question. 507630. Let me check. Yeah, now it is correct. Okay, so there was a problem in the interest rate. Remember, so this is the, do you know what I have made the error? I tell you what I did. What is the wrong I did? I did,
Okay.
and I use the 4%. I use coupon in the calculation of present value. This is my error, but this
Also,
is
we
not.
don't
Yeah, we cannot use this 4%. This thing
we
I'm
have to
telling
use
you.
8%.
No, 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 no. We have to use the
Oh,
yield 5% in the
oh
calculation of
yeah,
present value. So this thing I'm telling you again
because
and
you told
again.
me.
Yeah, and thank God that this error is occurred, and you will learn, because we human learn from the
Yeah,
errors only. We do not learn on
yes,
normal basis. We learn more from the errors. So this error is coincidentally occurred. So what it is, we can, if we use the coupon rate, this is coupon rate, we cannot use the coupon rate in the calculation of present value. You can save this line in your mind, that we cannot use, that's it. So this means that it's limited, prohibited. You cannot use the interest
yes.
rate or coupon rate in the calculation of present value. Okay, you can
Okay,
only use the market yield. Okay, so if I use the market yield,
okay.
this is the 5%, and if I took the present value of 5%, then the answer is correct. So now it is complete. Return to question. Requirement. Here should I go? Yeah, requirement 2.
Yeah, yeah, required to.
Yeah. So what is the requirement? Prepare the journal entry to record their issuance by national on January. First, I will write here the journal entry. So that, remember, you must have memorized the journal entry. If you know the journal entry, you will directly put the amount
Mm-mm.
simply. Now, what you need? You need three things. You will debit the cash. How to what amount? Now the question is, what amount you will write here? Present value of total amount. Yeah, both of these. I will tell you what to do. Now, what you will credit?
Okay.
You will credit the bonds payable. Why bonds payable? Because it is your liability. It's the liability of issuer. The difference between is recorded as a interest. So as a discount. So bonds payable is total amount. You will always credit the bonds payable with the face value. And what you will write
Okay.
on the cash side, you will write the present value that we just calculated in the last question. It is 701,526, and the difference is debit discounts on bond, discounts on bonds payable. So how will you calculate the discounts on bonds payable? Take the difference.
We have to. Yeah, we have to minus these two, deduct it
Yeah,
each other.
we will deduct each other. It is 701,526. So it is 48474. 48474. Now I have the entry in my mind. I know the amounts. What I will do, I will quickly go to the question and I will put the amount as it is, as I written. You will see that answer. Okay, so now what I will do, record the issuance of bond. This is issuance of bond. Remember, this entry is at issuance. Okay,
Okay.
I give you a tip. When you are preparing the when you will start the preparation or revision, do one thing. Record an important entries. What are the important entries? Entries are journal entry at issuance, journal entry at maturity, journal entry during the life of bond. And what are the journal entries examiner can ask you during the life of bond is that what is the value that should be recorded in the balance sheet, what is the amount of net book value in the balance sheet. What you will do, you will do the closing outstanding balance. And what is the interest expense at this time period, this is at what is the cash, what is the discount. So these are the important things that you will need to know this, but we are going to practice this again here. Now we are practicing the issuance. What I will do, I will debit the cash. So what is cash?
701
701,527.
526.
And I will debit the discounts on bonds. I will directly hit this. It is 48474, and I will credit the bonds payable. This is, you can write directly so that this will save your time rather to scrolling down. Direct type it directly. This will save your time. 750,000.
Yes.
Okay, I will check my work. So okay, it's correct.
I
So
have a question. I know I repeat this question, but um for the cash,
mhm,
when we put it in credit and when we put it in debit, and
good
for
question.
discount,
Yeah.
for these three is like cash, discount, and bonds payable, when we put it in credit and when we put it in debit. So
Okay.
I know I already asked yesterday as well, but I
Okay.
forgot.
Remember, this is at issuance entry. Okay, don't worry. This you the answer of this question. Let me see the requirement. If there is any requirement that will prepare the general entry. Okay, the answer of this question that you just asked me will be cleared at the end. Will be cleared at the end because
Okay.
we are going to solve all you have asked me. We are going to solve in this homework. First, we have solved at
Okay.
issuance. Now, I will tell you what you have to do at issuance. Remember, what at issuance you will debit cash. Why you are debiting the cash? Because you are receiving the cash. Now, what is meaning of you? Meaning of you is the company. National Orthopedics Company, whoever, whichever the company is given in the question. So this entry, if we are preparing the entries for the issuers only. The reason is that we are not liable, we are not obliged to prepare journal entries for the investors. Investor would have their own accountants, we are not obliged for investors. So when you receive the cash, you will debit cash, and the important thing is that what amount you will debit. You will debit the present value. You will debit the price of bond. The price of bond you calculated just. It is price of bond.
Okay. Yes.
Price. Okay. And what you will credit? You will credit bonds payable with the face value. This is face value. Okay. And what you will debit? The difference between the cash and the bonds payable. You will debit the discounts on bonds payable. Discounts on bonds payable. Got it? So this is, and I
Yes.
am repeating an entry. If you are a brilliant, if you are a very smart student, become smart. Memorize when I repeat. You will do it very quickly. You will debit cash.
Okay.
You will credit bonds payable. You will debit discounts on bonds payable. So how to memorize this entry so that it is not difficult for you. First write the cash amount, then write the bonds
Okay.
payable credit amount. The difference between these two is discounts. Either
Discount.
it is a discount, either it is a premium, but we are discussing the discount. So discount is always debited. If it is premium, it will be credited, but we are solving the
Okay.
discounts. And how I know that this is at discount? Because I know that the price of the bond is less than the face value. The yield is greater, or in other words, the coupon is less than the yield, the market rate. So that's why I know that this bond is is issued at discount. Got it? So
Okay.
this entry,
Yes.
all we are doing, this is for the discounted bonds. So debit cash, credit bonds payable, debit discounts on bonds payable. Okay, I will summarize all
Thank
this
you.
at the end of this question. Then you will know each and everything. All
Thank you
entries.
so much.
No, no, you are always welcome. Okay.
You can click first a return to question
Oh
at the
yeah, I
top, the
forgot.
black one.
Yeah. Okay. When in the with the passage of time, it will be on my hands.
Yeah.
Just hold on. Uh, just give me a second. It's a screen dot.
I know, I don't know. Today I was so lazy. So I didn't do anything, but I was so lazy. So I even didn't watch the video. So right now I'm so embarrassed.
No, no worries. It's okay. But
So,
please
but I have to
always
learn all
do.
these.
Yeah, yeah. Always do work hard. Always do. Always do
Yeah.
watch the video, because I'm just recording for you. I haven't
Yeah.
recorded,
I know.
never recorded for. I just created a new email on my company basis for you, because this is our company. This is our
Yes.
school in Pakistan. We are running this
Oh.
this is not only in Pakistan. We are running this school for international. But the problem is that this school,
Oh.
we are only providing the accounting services to ACCAs, to CFAs, to the professional qualification, the higher one.
Oh. Nice. Yeah. But I have to learn all this before my exam,
Yeah, yeah, sure, sure.
and I will.
And sure, we will. Don't worry, we will do. This is my goal, that I have to make you, that you are able to pass the exam. I will make you, inshallah.
Thank you. Inshallah.
Okay.
But I have to do hard work. Without hard work,
Yeah,
I can't pass the exam.
if you don't, you will not be able to pass.
Yeah.
If I'm knowing, I'm only teaching you that, and if you are not revising it at home, you will not be able to pass it.
Yeah, I know. So I will do it. I will do my best. Not just my best. I'll do hard work.
Yeah. Okay, thank you very much.
Okay.
And if you do hard work, if you do best, I'm always with you to support. Whenever you text me, whenever you have issue, whenever I have time, whenever I see the message, I will
Yeah.
guide you. Okay. As yesterday,
Thank you so much.
I just reviewed. It was in my mind that your homework, two questions of your homework was wrong, and it was in my mind that why it is wrong. Then I again watched the question carefully. So then I got the answer.
Oh, you have a lot of students? How many students do you have?
Uh, there are all the students are different. The ACCS one, which is the qualification, there are a lot of one. Maybe you can say hundreds because they study, they take class on a group basis. The other
Oh,
students are taking individually. For example, one is
okay.
from Netherlands, one is from Morocco, one is from Dubai, one is from Bahrain, two or three from America, one is from Germany, Belgium.
Oh,
Yeah,
okay, nice.
yeah,
Thank you.
yeah. And the other previous students have passed the exam, so they have gone. They were some of them were at their final degree, so they have gone.
Oh, okay.
Yeah. So we are at question requirement 3.
Number three.
Complete this section
Yes.
question by entering your answers in the table below. Okay, what we need? We need the cash interest, we need the bond interest, we need the amortization, we need carrying. Remember, the cash interest will be same. What we have calculated so far, I repeat, it is 30,000. How I calculated? 750,000 multiplied by 4%.
No, I think 5%.
No, that's what I'm telling. I was just about to tell you that. Remember, I told you
What?
3 to 4 times that cash interest is calculated using the 4%, the coupon. So cash interest is always calculated using the coupon. Cash interest is always calculated using the coupon. You need now where you will use the
Okay, okay.
yield. Where you will use the yield. You will use the yield elsewhere, everywhere other than the coupon. Everywhere. For example, you will use the yield in the calculation of bond interest expense. You will use the yield in the calculation of present value of principal. You will use the yield in the calculation of present value of interest. You will use the yield in the calculation of futures value, of annuity, everything else. So just coupon is just
Okay.
used to calculate the cash interest. Why? Why we are using the coupon? Get the logic. So may you can remember with the logic. The logic is that this is the rate that we are paying to our lenders over and above. We are paying, okay, we have took a loan 750,000, right? We will pay
Right.
750,000 plus over and above amount. What is over and above amount? Over and above amount is called coupon. In more financial language, in more formal language, we do not say it is cash interest. We say it is coupon. And if you have a financial
Wow.
calculator, the name is given in the financial calculator is PMT. It is written on the calculator. I will show you. I will
Oh,
send you a snap. Okay. So we have a cash interest is 30,000. And okay, how to calculate the bond interest expense? First, write the carrying value at the start of date. What carrying value we just calculated?
I think
701526. 701526. So this is the carrying value. This is the present value, carrying value. This is the cash that you just received. So remember, this is the carrying value, this is the present value, this is the outstanding amount.
okay.
Okay,
Okay.
okay. So now what I will do, I will calculate the bond interest, which is 701,526 times 5%. 526 times 5%. It is 35076. 35076. And they did not apply the formula. Okay, we will do it manually. So 35076 minus 30,000. So it is 5076, 5076,
5076.
and we will add 5076 plus 701526. It is 706602. Okay, so let's see is it
Okay.
correct or not. Okay, correct.
Yes.
So
Correct.
yeah, there is an I
It's
have
long
another
question.
yeah,
Yeah.
I have
I
another
said this.
student.
It's long question. Okay.
I have another student. Whenever I say that, let me see, is it correct or not? She always says, yes, sir, obviously it will be correct. I said, no, uh, still I have to check because the studies are different. So there is maybe a minor difference. As yesterday, the rounding off differences were found. Okay, so what was your question? What was you asking?
Uh, I forgot. There wasn't a question. I just wanted to say
Where?
that I just said it's correct. I didn't say anything.
Uh, I didn't get
Hello?
what.
I think there's internet connection problem.
No, no,
There's
no.
a connection problem.
No, no, no. I'm receiving your voice clearly. I was thinking that what you ask.
I didn't ask anything. I
Okay,
don't have a question.
okay, okay. Sorry.
Yeah.
So 30,000. This again, it will be 30,000. Okay, why I'm completing the table? Remember, the reason is that although we are not required to complete the table in the requirement 3, but see, we have to prepare the appropriate journal entry on 31st December 2024 at maturity. So I need this column, the last one column. So I cannot go
Okay.
on, I cannot skip this. That's why yesterday we have to come back to calculate it again. So that's why I will calculate it right here. Now I will calculate the interest amount. How will I calculate the bond interest? 706602 times 5%. It is 35330. So I will calculate the difference, which is 35330 minus 30,000. It is 5,
5330.
yeah, 5330. And what I will do, okay, now it is automatically run because he has saved the formula, what we were programming. Now I need only the bond interest expense. So the next amount is 711,932 times 5%. It
Not
is
5%.
35597. 35597.
You
So
know, I was about to tell you, professor. So because I always ask my professor, so that's why I used to say professor. So I think this method is so easy. It's just we have to learn and we have to memorize everything. So then it's so easy.
yeah, it is so easy. This is financial accounting. The financial accounting or whatever the accounting is so easy if you learn everything. See, I am applying the
Yeah,
learning things. I'm just applying the things that we have learned. I'm just applying the things.
yeah,
I'm not using another technique. The way we have learned in the slides, we are just practicing it. That's it. So that's why I told you that do not, if you do homework directly, that will be like it's not a good thing. Do learn a concept first, then apply it. That's why. That's very
yeah.
simple. Learn concept, apply it. That's it. So the next is bond interest expense, and always learn from the questions. What is the purpose of questions? What is the purpose of practice?
We
That
have to learn.
how to solve the question, how to solve quickly. What is the next step? Because in the exam, when students are sitting in the exam, what thing that pressurize them is that they don't know the next step. Even they don't, some of the students are so dull that they don't know what to start, where to start, how to start. They don't know. So practice will tell you
Yeah.
how to start.
Yeah.
So now the next step is, I know that it is a circle complete, circle is going on, cycle is going on. 717
So
529 multiply by 5%.
by 5%.
Yeah, good. Are you with me? Are you getting with me?
Yes.
35876. So everything is, it's very simple now. I what I am
I
doing is
think
that
the
I'm,
amortization
yeah.
I think I think the amortization schedule is so easy, but before that we have to calculate everything, and we have to know where we have to put
Yeah,
cash, where we have to put down payment. It's tricky,
yeah,
but the schedule, amortization schedule is easy.
yeah. Amortization schedule is easy, but you have to learn it manually before first time or second two times you have to learn it manually. First, you learn it
Yes.
manually, that where to put cash interest, what amount you will use in bond interest, discount amortization, how you will calculate the discount amortization. It's a difference between cash interest and bond interest expense. How will you calculate the carrying value, every next carrying value? Okay. So now
Okay.
the next learning thing for you is that carrying value and the outstanding balance and the net book value are the same word. Same word. Okay. So
Okay.
net book value,
Oh.
carrying value are the same amount. Okay. So I will calculate the next one is 723405 times 5%. It is 36170. 36170. So I will calculate the next one, 729575 times 5%. It is 36479. 36479. Now next is 736054 times 5%. It is 36803.
I have
36803.
a question.
Yes, please.
Is is there any calculator for accounting, like
Yeah,
financial accounting? There's any
there is a calculator for the accounting, but that calculator is only used in the calculation of that is useful in the calculation of present value and future value. But do not use that calculator, because that is a confusing calculator and that is expensive one. Use a normal calculator that is
Oh,
allowed by your university. The
oh,
financial calculator are basically used in industry, and financial calculator is only used in the higher qualifications like PhDs, like CFAs. So they only allow you to use
oh,
the financial calculator. You cannot use any other calculator. Okay, so that's a problem, that we are only obliged
okay.
to use a financial calculator in CFAs or other things. So see, the last amount is what? 750,000, which is equal to the face value. And I
Yes.
told you that this amount will always, the last amount at maturity must be the face value, because you will pay 750 at maturity.
Okay.
And now, okay, I'm telling you here, I will repeat it in the last requirement, but I will tell you here what you will do at maturity. You will pay 750,000. You will pay the bond interest expense. You will pay the cash interest. The difference between two is discount. What we will do, we will formulate all these four entries. I will do 750 debit. I will do bonds payable. I will reverse this entry. But don't worry, I will tell you that. Okay, just check my work.
Okay.
Oh, it's all correct.
Yes. Because you are smart.
How do you know? I mean, you said it yesterday as well.
Yeah, because I think you are smart that you are doing the difficultest. You said some the name of the certificate. You said 30% of the people in the whole world they just passed that certificate.
Yeah.
So yeah.
Okay. So thank you. I was confused. I think I was thinking why she said me smart, because obviously if I'm teaching you, I will know these things. I have to know these things. But I don't know why she's saying that smart. Okay, thank you as well.
Yeah, because of the certificate that you said.
Okay, okay, okay. Got it. So now the
You
next,
know,
yeah,
there is a certificate called CPA, Certified
yeah,
Public Accountant. So
yeah,
even I don't wanna take that certificate because it's so difficult.
yeah,
Whatever we learn in these 4 years, so we have to take 4 exams and we have to pass that 4 exams, and it's so difficult.
but
That's
remember,
why.
don't worry, do not run away from difficult. If okay, remember, the more, this is the rule of finance, more risk, more return, more difficult, more salary, more rewarding,
Yeah,
more comfortable life. So if I know
yeah,
that CPA is very difficult because it is acceptable in Canada, in USA, in Europe, in all over the world, but it's a difficult.
yeah.
You cannot work in Canada, because I have worked for Canadian firms. In Canada, you cannot work as an accountant if you do not have CPA. If you do not have CPA license, you cannot work in Canada as an accountant. You must have CPA. I
No,
don't know what about other countries. So it's a
here
requirement,
as well.
maybe their jurisdiction requirement.
Yeah,
Like in finance, if you have a CFA, your salary will be, obviously will be very high, because it's difficult. Companies consider that it's a difficult exam, and there is a huge knowledge. Even I
yeah.
tell you, even MBA does not have that knowledge. MBS does not have
Um,
that knowledge. CFA is a huge knowledge. And the one good
so
thing
you
about
are doing
CFA,
CFA?
yeah, one good thing about CFA is that uh, it is a non-profit organization. They give you a lot of discount. They give you a lot of scholarship because it's a non-profit organization in America. It's working
Oh,
under Harvard. It's working under the Harvard. It's USA. But it's, you just have CFA. Either how you passed does not matter, how you got it does not matter. So it's they just see the name CFA, the charter CFA on your CV, and they hire you directly at a higher jobs.
wow, nice.
Okay.
Hopefully you pass it.
Yeah, inshallah I will. Okay, number 4 is prepare the journal entry to record interest on June 30, 30th June 2021. It's a very simple. You know what is the interest, and now this is entry at every period. What entry you will pay at 30th June? What entry we will pay? We will record. I will debit the interest expense. I will credit the cash interest, and I will credit the difference between these two. So discounts on bond I will credit. So now I will go to the table because they asked me at 30th June 2021. Where is 30th June 2021? Here it is. I will simply come here.
Yes.
What I will do, I will pick the amount, write it here, and simply it's very simple, 30,000. Discounts on bonds, I will write it later. This is 35076, and discount is 5076.
506 7
See how
6.
simple it is, if you
So
remember.
for the first one, yeah, for the first one, you put the discount on debit. Now you put it on credit.
Because it's a discount, because it's a discounts on interest. The first one is discounts of present values. Okay, what we are
Oh,
doing actually, we are amortizing that discount. If you see, if I go to the table, if just hold on. If you see, where is the requirement? If you see What is the total amount of discount amortization? 4874. 4874. Okay. If I go to that double entry, what it is? 4874.
What?
Can you see?
Yes.
So we are
Yeah.
amortizing
Yes.
this over a year. We are amortizing this over a year, over periods. So 4874 every year this discount is amortizing. Why I am crediting? Because I need to increase my present value towards the future value, towards the face value. So that's why I am crediting. I'm increasing my balance basically. Okay. But however, I
Okay.
give you a trick. I give you how to solve it. It's a tip. If you first of all always write debit interest expense, always credit cash interest. Now take a difference of these two entries is 5076. Now now the question is what to do. Either you have to do credit or debit. Think if the smaller side is credit, if the smaller side is credit, credit discount. If the greater side is
Oh.
debit, if the smaller side is debit, debit discount. If the smaller side is credit, credit discount. That's a tip.
Oh.
It's a free
This
of
is easy.
Yeah, it's a free of cost tip. So this tip you can
Yeah.
also apply here. First of all, write the cash, write the bonds payable, take a difference. This difference is discount, and obviously in discounted bond, cash side will be smaller. So smaller side debit. If the bonds payable, this if this is smaller side, discounts will be credited. So discount will go to the credit side, will go to the smaller side, will help to the smaller side. Okay. So you can memorize
Okay.
with this tip. But as you will practice, if you will practice, then this thing will you will learn it. Now what I will do, I will put simple the entries here. Interest expense, it is 35076, 35076. Second is discounts on bonds,
5076.
but it is credit 5076.
Yes.
And last one is cash interest. So it's directly the cash, because either it is a cash interest. Let me see, is there any amount of naming cash interest? But there must not be. Okay. So you will credit the cash here, 30,000. I will check. Oh, it's correct.
Yes.
Okay. The requirement number 5 is prepare the appropriate journal entries uh, at maturity on December 31st, 2024. Why it is only 2?
You can click the return to question, the black
Oh,
mark at the above,
okay, okay. I forgot. Okay, so the
and then
requirement,
click to requires five.
yeah. Okay, so yeah, now, okay, okay, okay. So record the interest expense. We are done this interest expense, right? No. Oh, no, 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 no. It is maturity. It is maturity. Okay. So what I will do? Okay, okay. I remember the format last in the last class. So we will simply go to remember what where to record the interest expense at maturity. So I will go to the table
Okay.
here. What I will do? I will record the entry of this amount. Simply this is the same entry. What I will do? Same entry at maturity. At maturity. Just give me 1 second. Okay, my headphone was disturbing. Okay. At maturity, what you will do, you will debit the interest expense, you will credit the cash interest, and you will take the difference, and that difference obviously will be credit of discounts on bonds payable. So what is the interest expenses? 37143, 37143. What is the discount? We will see it is a 30,000 cash and the discount is 7143. Okay, and I will also record the maturity of principal, the and double entry for principal amount, that will be debit bonds payable. Remember, we credited bonds payable at start,
Yes.
but we are now debiting. Why? Because the liability is reduced now. We have paid 750,000. So I will credit cash.
Oh,
Why I will credit cash? Because I have paid 750. So at maturity, you will perform two double entries. You will do two double entries. One is about interest expense. I will make it this. One is interest expense, and second one is the principal, repayment of principal, because you are repaying the principal. Repayment. So I will go to the requirement. I will write these entries and my answer will be correct. So first of all, I will write the interest expense entry. What I will do, interest expense debit. It is 37143, 37143. What I will credit, it's discounts on bonds payable. It is 7143. What I will do, cash.
cash interest.
Oh, cash. It is 30,000. Sorry, 30,000. And I will do this as well too. So it's bonds payable debit. Bonds payable debit. It is 750,000. And I will credit the cash. It is credit 750,000. Let's see what happens. Oh, all correct.
Yeah.
So what you learned, if you know everything, if you know what to record at maturity, what to record at principal, how to record interest expense, how to record issuance. Now I'm summarizing the requirement. This is very important.
Okay.
I will take this 5 minutes so that you can do, you can pick, you can I will give you a summary. See how we started. We started from the price of bond and then we ended at maturity. So first of all, you will calculate the price. How will you calculate the price? You need two things: present value of principal, present value of interest. How will you calculate both of these present values? Which rate you will use? Very important. You will use market yield. Tell me, repeat with me. Which rate you will use? Market yield.
Market yield.
Market yield for the calculation of present values. Now, you will calculate the present value for principal, plus you will calculate the present value of annuity of interest. So for interest, you need present value of annuity, ordinary annuity. Remember, it's not delayed annuity or it's not advanced annuity. So present value of an ordinary annuity and then plus present value of principal. Done. Now second thing, we will record this amount at issuance. How will you record this amount at issuance? Remember, you will debit cash. What you will debit? Cash. And what
Debit
you
cash.
will credit? You will credit the bonds payable. Now remember, you will debit the cash with the present value. I will show the things like here. We are now at here. So you will first you will debit the you will debit cash, then you will credit the bonds payable. The difference between these two is discounts on bonds payable. Discounts on bonds payable. Now, what you will do credit, what amount you will record on bonds payable? Face value. It's always face value. Either it is a premium bond, either it is a discounted bonds, either it is a par value bond. Now, what you will debit? You will debit the price of bond that you just calculated. Price of bond. And you know how you
So,
calculate the price of bond? Present value of principal plus present value of interest. Yes, please ask.
yes. So because the cash that for the first one, so it is 775 750,000, and the last amount as well, the maturity at the end that we got, it was the same. So is it par value bond,
No, 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 no. I tell
because
you.
these two are same?
No, 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 no. The logics, listen the logic. At present value, at now, you need to calculate the present value. Although the cash is 750,000, the bond, sorry, bond is 750,000, but the present value of that face amount is 7701526. Now, why 750 at maturity? You are this thing are you confusing, right? Why 750 at maturity? Because at maturity this is the same.
Yeah.
The reason is that we are repaying the full amount. We are repaying the full amount. Remember, we have the discount in the at issuance. What was the difference between these two? Around 48,474. So this was the discount amount. This discount amount I am amortizing every 6 months. We also have recorded the discounts. This is not the case that we have not recorded the discount amount. But remember, at maturity, you will pay 750,000 plus you will pay the interest. So at maturity, these entries will be same. Why? Because you have to pay 750,000. I give you example. For example, I have took 5,000 from you. 5,000 from you. Now, how much
Okay.
amount will I pay you after, for example, it's a 5 days. How much amount will I pay you? Obviously, I will pay you 5,000. What if I have took a loan from the bank for 3 months of 500,000? Now, I will obviously pay 500,000 after 3 months plus interest amount. But I need the value today. So what? How will you? How we will calculate what is the value of today? We will calculate the present value. Got it? So this
Yes.
is the logic. This is
Yes.
practical. This is practical because at maturity you have to repay the full amount. Full amount. There is no discount at maturity. And at start, there is a difference between the present value and the future value. So that's why there is a difference of discounts between the present value and the future value.
Yes.
Got it? So now
Yes.
I move to the requirement 3. Then requirement 3, you will prepare a schedule. How will you prepare the schedule? The format is written, good thing, cash interest, bond interest expense, and discount amortization carrying value. How will you calculate the cash interest? Face value multiply the coupon rate. The coupon rate. Coupon, remember, I give you another tip for your easiness. Coupon rate is always given with the face value. If you go to the question, if you read the question, how it is written, National Orthopedics Company issued 8% bonds. So when you see that issued 8%,
Yeah.
issued 9% bonds, this means that this is the coupon rate. This is coupon rate of national company bonds. What is 10%? 10% rate is the rate of other bonds in the market. 10% rate is not our rate. It's not our rate. It's a rate in the market. So what is coupon? Coupon
Yes.
is our rate. What we are using, what we
Oh,
are paying. We are paying 8%. to our lenders, but we are using 10%, effectively 5% for the calculation of present value and future value. Okay. So
Yes.
the next so how will you calculate the cash interest? The stated amount multiply with the coupon rate. How will you calculate the bond interest expense? Multiply the last carrying value, the last period carrying value with the market interest rate, with the effective interest rate. In this example, the effective interest rate is 5%. So you will pick the last carrying value. For example, if you are at 30th June, you will pick the carrying value at 1st Jan. If you are at 31st December, you will pick the carrying value at 30th June. Then you will multiply. If you are at 31st December 2024, you need the carrying value at 30th June multiply the effective interest rate, the yield, the market interest rate. So I repeat so that you can memorize how you will calculate the bond interest expense, last period carrying value, the other name for carrying value is the outstanding balance, net book value. So last period, why I'm repeating, I'm saying you all these three words because in the exam he can ask you anyway. As you see that in the last question, in the question number, I think two, he asked net book value. He didn't ask carrying value.
Yes.
So that's why I'm telling you all the words: carrying value, net book value, or the outstanding balance. So these are the same words. Don't ever confuse with these words. Okay.
Okay.
Now I am moving to the requirement number 4. Prepare the journal entry to record interest. So you can record interest you have to record interest at every period because every period the interest is paying. But see the requirement carefully. He's asking you that what is the entry at 30th June. So you need this column only, this column. That's it. This column only, and the entry is same. You will always debit interest expense, you will always credit cash interest, and the difference between these two is discount. So discount, now what you will write the discount? If the smaller side is credit, discount is credit. If the smaller side is
This one
debit,
is
discount
double
is debit.
discount double.
Good. Why I'm not saying always credit? Because there is a premium on bond. If there is a premium on bond, these entries will going to reverse, will change. Okay. So that's why
Okay.
I'm saying that smaller side. It's a tip for you. You will, I'm repeating last time, you will debit interest expense either whatever the period he's requiring you, because now you know the entry. He can, if I ask you that what will be the double entry at 31st December 2023, you can tell me. You will tell me that sir, debit interest expense is 36,479, credit cash 30,000. The difference between two is credit, which is 6,479.
Okay.
Okay. So now the question can be required you at any time. They can ask you 30th June 2024, 30th June 2021. So because now you know the entry, you know the concept, you know the logic, you can solve it. Now I'm
Yes.
moving to the last one. Prepare the appropriate journal entries at maturity. Remember, if although he has specified you that what journal entry they are requiring, what if they don't specify you? Obviously they will specify you, but what if you must have a logic in your mind that I have told you always prepare two entries at maturity. Remember, two entries will be prepared at maturity. One entry is for interest expense, one entry is for principal. This is one entry is for interest expense, one entry is for repayment of principal amount. So this means that
Yeah.
when he is asking you that prepare journal entries at maturity, So automatically your brain, your mind should click that, okay, I need two types of entries. One is about interest expense, one is about prepayment of bond. Prepayment of bond entry is very simple. So the face value, debit bonds payable, credit cash, 750,000. Any questions so far?
No, thank you.
Okay, so now let's see what is the next question. Prepare the journal entries for LCD's purchase of components on November 1st, 20. Okay, so these are the installment. Okay, so we need to learn it. We will go to the chapter, we will learn it. First, I need to teach you the bond on premium, because although I haven't seen the question on bonds premium, but as it is in your chapter, it is included in your chapter, so I think it will come in the, maybe it can come in the exam. What if it can come in the exam? How will you solve it? I will tell you. Remember,
Okay.
what is bonds premium? Now so far we have solved two questions on discount bonds, and everything, I hope everything is on your fingertips, and when you will revise it, everything will be on your fingertips. Got it?
Yes.
Are you confused?
No, no.
Okay. So what is bond premium? Remember I told you some rule at the start, that what, how to
Yeah.
identify that, is it a bond premium, is it a bond payable, is it a discount, is it a par? So remember, I gave you a very straight indication that if the coupon rate is greater the market, this means that you are preparing, you are issuing the bond at premium.
Premium.
So,
Premium.
so in this question, if you see, the question is same. Master V Industries issued 700,000, 12% bonds. The interest is 42,000 is payable semi-annually on 30th June. Same. Bonds is 3 years and is 6. Market yield is 10%. So now the bond is issued at discount. So first of all, we will do the same thing. We will do the same thing. We will calculate the present value. First of all, we need the price of bond. Step 1 is price of bond. Price of bond. Price of bond step is same. Either it is a premium, either it is a discount bonds. The difference between the premium and the discount is amortization table. The only difference, one, I will show you what is the difference, and the difference is about the amounts of entries. Okay, how will you calculate the
Okay.
price of bonds? Present value of principal plus present value of
Multiple.
interest. Now we have a present value of principal. He has solved you. I will show you that he has solved you, and you do not need to solve it again because it showed you. You will use the normal. Now what rate you will use for the present value? 5%. Why? Because
Ordinary.
it's semi-annual.
Yeah.
10 divided by 2 is equal to 5%. It's a semi-annual. So we will use the 10% rate, 5% rate, which is semi-annual. Okay. So, and for the interest, we will use the ordinary annuity present value of an ordinary annuity at 5%, or and n is the 6. Okay. So this is the,
Okay.
this amount is the present value of interest, and this amount is the present value of principal, and the, now see, the present value is 735, 533. The face value is 700,000. So now the bond is issued at premium.
Premium.
Now, so this means that I will teach you comparatively. First, in the discounts bond, what we say? We say that discount on bond. Now we will say it premium on bond. The difference
Oh.
between these two is premium on bond. Now, how to make a double entry? The next step is, first step is present value of price of bond. Second step is double entry, journal entry at 1st Jan 2021, which is at start. What will be the double entry? Double entry is same. You will debit cash, you will credit bonds payable. Double entry is same, bonds payable. The
Okay.
difference between these two is premium. Now, I gave you, remember the tip? I gave you the tip that if the smaller side is credit, premium will be
Yes.
credit. If the smaller side is debit, premium will be debit. This is the same for the
Similar to discount.
similar to discount, exactly. Similar to discount.
Oh,
So I will write the first amount, then I will see what is now how to what amount you will write in cash present value 735 533. It's a
533.
present value. And I why I'm repeating it, why I'm writing it again and again, just for your easiness, because in the if I repeat it again and again, you must have memorized it.
Yeah. So I know myself. Whenever I repeat by myself, so I will memorize it.
Good, good, perfect, no worries. So it's a 700,000. Now, what is smaller side? Credit. So I will credit the
Credit.
premium and I will take the difference between these two is that difference is 35,533. This is the difference. 700,000.
So yeah, I have a question. I know it's repeated, but I have right now.
Yeah, yeah,
So
ask.
for the principal, you used present value, but for the interest rate, for the interest, you use present value of ordinary annuity.
Yeah.
Is it similar to all of questions that we can use for principal's present value?
Yeah, it's a similar to all
And for
question.
interest,
Whenever you see interest, you need annuity, ordinary annuity. Whenever you see
okay.
principal, you see you have to use a normal present
Oh,
value. Now I
okay.
give you a logic. If you know the logic, you will memorize it. Why I am using annuity? Remember, there is a reason of annuity. Although I have explained in the
Yeah,
last lecture.
because it repeats. Sorry, because it repeats if every year
Yes, good. It's repeat
the
every year
interest.
and the amount the time period is limited. The maturity is limited.
Yes.
It's not unlimited. Because if there is another word, if the mature if it is written that bond maturity unlimited, then we will not use annuity. We will use perpetuity. That is another term. I don't know if you have studied it or not, but it's another term.
No, we didn't.
Okay, you will in the next, maybe in the next time, because
Yeah.
okay, we will see. So principal always present value normal and interest always annuity. Okay, so bonds payable. So what I have made a double entry, debit cash, credit bonds payable with the face value, cash with the present value, and the difference between these two is premium with the smaller side. If the bonds, if the smaller side is credit, I will write it on credit side. If the smaller side is debit, I will write it on the debit side. So it's a simple. But if I summarize, if you want to memorize, although this is a tip, now see, discount is debited and premium is credited. Discount is debit, premium is credit.
Yeah.
So at issuance, now the word issuance is important because it will change during the time. At issuance, discount is always debit. I will write it here so that when you watch the video, you can write as a notes. At issuance, discount on bond is always debited. So discount is debited and premium is credited. So if you compare this double entry with the double entry of discounts, you will know that the discount, remember we debited the discounts always in at
Yes.
issuance we debit discount, but at during the time discount will change. Discount will credit, premium will debit. It will reverse. At issuance, discount is debit, premium is credit. during the time, during the life of bond, during the life of bonds, you will reverse this. Premium will now debit, discount will credit. So it's an another form you can learn. It's not written on books, it's a practice. So during life of bond, discount is credit. Remember the entry during life, what entry you we made? Debit interest expense, credit cash interest, and the difference is discount or premium. Now if the discount is debit, discount is credit during the life, and premium is credit during the premium is debit during the life. So we will see it. Now I have made the entry at issuance. Now the third step is I need the table. I need the table. Now what I will do, I need the cash interest. First is cash interest. Sorry, first is date, because dates are very important. First is date, then
Cash interest.
it's a cash interest, then it is a effective interest or interest expense, then it is now previously we studied the discount. Now we will write it here, the premium,
Okay.
increase in premium. Discount is reduction, premium is increase.
Oh, we
So
have to add it.
no. Premium is increase at issuance because it is credited, but we will
Yeah.
amortize over the period. We will decrease by the premium amount. Premium is increase
Okay.
is although it's an increase amount, but when you will amortize the premium, you will decrease the outstanding amount by premium. So decrease premium
Oh,
or reduce premium, and this is the carrying value, the outstanding amount, carrying value or the outstanding amount. So first date we have is the 1st Jan 2021. At 1st Jan 2021, what is the present value? 735
yeah.
533. 735 533. And you know that in cash interest will be same every period. So I will write the
Yes.
period here just to zoom in. First period, then second period. This is 30th June 2021. This is 31st December 2021. 1 year completed. Then, uh, then I need the 30th June 2021. Sorry, 2022. Then December 2022. Now it is completed. So last period is 30th June 2023 and December 2023. So the period is completed. Okay. And I have told you that cash interest will remain same. Tell me how to calculate cash interest.
Cash interest. So,
Stated amount
um,
multiply by the coupon rate. Coupon rate is 6%. So stated amount is 700,000
there's
and coupon is 6%, half of 12%. So it will be 42,000. 42,000. Now, how I will calculate the interest expense? I will write the formula here. Always the carrying value multiply
Multiply
by
by cash interest.
effective interest, effective rate.
Oh yeah,
And effective rate in this question is 5%.
6.
5%. Not 6%.
Oh,
6% is coupon. 6%
okay,
is
yeah.
coupon. So,
Coupon.
yeah, how you will calculate the interest expense? Now, the value is 735 533
53
multiply 5%.
by
So it is
5%.
3677. So it's 36777. 36777. Okay. You will take the difference between cash interest and bond. 36777 minus 42,000. It is 5223. 5223. Now remember, in discount, what we do, we add discount plus carrying value, but premium is
Oh,
deducted. We will reduce this amount 735. So always this is the only difference. Everything is same. The difference is premium. 735 533 minus 5223
minus.
minus.
Oh,
So it is
yeah, for
730.
this one it's minus.
Yeah, for premium it is minus, for discount it is plus.
It is
Now
plus.
everything is same. 730 310 multiply by 5%, it will be 36516. Take the difference, 36516 minus 42,000, it will be 5484. Sorry, 55484. So 5484 minus 730 310 minus 5484. It will be 724826. And then 72486 multiplied by 5%, it will be 36241. Then you will take the difference minus 42,000. It will be 5759. And then 5759 minus 724826, it will be equal to 719067. Then you will multiply with the 5%. This will be 35953. 35953 minus 42,000, it will be 6047. So 6047 minus 719067. This is 713020, and 713020 minus 6047. This will be equal to okay, sorry, 713020 multiply 5%. This will be equal to 35,651. Then you will take the difference, which is 42,000. This is equal to 6349. Then you will take 36349 minus 713020. This is 706671. Remember, at maturity, the carrying value will be equal to the face value. So
Okay.
706671 multiply by 5%. This is 35333 or 4. If I round it off, it is 4. So 35334 minus 42,000. It is this tetra 6. So minus 706671. So it is 700,000. Around it is 700,000. Okay. So
Yes.
there is a minor difference, which is a $5 difference. So the reason of difference is rounding off. and in the homework it will not create because it is automatically generated there. Now I'm making the double
Okay.
entries during the life. As he's normally during the life he was normally asking you that calculate interest expense. For example, if I ask you that what will be the interest expense, what will be the double entry to record interest expense on 30th June, what I will do, be careful. I will debit. Interest expense is always debit, so either it is a premium, either it is a discount. Interest expense is debit, and you will credit the, sorry, it's the gap must come. So you will credit the cash interest, it will be credited. So the interest expenses for 30th June is 36,777, 36,777, and the difference between cash interest is 42,000. Now the difference you will debit, because the smaller
Debit.
side is debit, minus.
Yes.
So 5 you will debit. Now what to write on debit? Simple, premium on bond. Normally we were calculating the discount on bond, so it is premium on bond. So that premium on bond is 5223. Remember, now go to the rule as I speak you, that during life discount is credit, premium is debit. So remember, it is proved that premium
Yes.
is debit.
Debit.
Now, so that this entry is done. Now if they ask you that last entry, that normally your homework is asking, so I am following the pattern of your homework. Okay.
Okay.
So
Thank you.
what will be the entry at maturity? Just give me a second.
Um, can I turn on the heater because it's a little bit
Yeah, yeah,
sound?
yeah.
Maybe it
See,
bothers you.
okay.
But it's so cold here.
No, 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 no.
It's
Don't.
raining outside.
No worries. If you wanted to do anything during the class, you want to drink, you want to go washroom, you want to do anything, obviously because you are a human being. I know that you are a
Yeah.
human being. So being a
So
human
yeah,
being, yeah, what?
I thought I thought because it makes sound, so I thought it bothers you.
No, I don't feel. The reason is that when I speak, I do not listen any sounds. My himself sound is always high.
Oh,
So
okay.
it's not bother me. Don't worry. Okay.
Okay, thank you.
You're welcome. Okay. At maturity, what you will record, what you will do, you will record two entries. First entry is about interest expense. So what will be the double entry for interest expense at maturity? The interest expense entry is similar, the same entry you will record at maturity. Only the difference will be the amount. So I will write here simply. I will debit interest expense. I will debit premium on bond, premium on bonds, and I will credit the cash. And you know the cash is 42,000. I will go to the up. What will be
Yes.
the interest? 35334. 35334, and you will take the difference, that will be Tatra 6. So this is bonds, premium on bonds. Now what is the second entry? Second entry at maturity is pre repayment of principal, repayment of principal. So very simple, it's a super simple entry. This is same for discount, either the bond is discount, either the bond is premium, the double entry is same. Debit bonds payable and credit cash. So what you will record on bonds payable and what will be the amount with the face value? Simple. Either it is a premium, either it is a discount. You will record the last entry at face value. So it will be the face value.
Yes.
It will be the face value. So the premium is completed. All your homework is completed in this one format I gave you. Your double entry at issuance is completed. How to calculate the present value completed. How to the first step is price of bond. Second step is journal entry at issuance. Then you will make a table. Then you will calculate the interest expense during the life. Examiner can ask you anytime that calculate the interest expense at maturity, and then you will calculate the maturity entry. So maturity entry, there will be two entries. One is about interest expense, one is about premium on bond. So I have taught you all these. This is done, amortization
Thank you
schedule.
so much.
Okay.
Yes.
So the next step is straight line method. We have calculated so far the effective interest rate method. Effective interest rate method. The difference between, remember, there is only one difference. In effective interest rate
Okay.
method, we calculate one by one. But don't worry, I will teach you this method in the next class, because I'm going to teach you the this one, installments, installment, because the question is coming at installments.
Yes.
Okay. Okay, what you want? Should I teach you the straight line method or installment? Because this will be a lot of for you. You haven't studied yesterday's and you have to study tomorrow's lecture, so this will be a club of everything. What I
That's
prefer,
fine. Because
yeah,
okay.
what I prefer, that you should study straight line method, and then we will study the installment of loan, because in this way this will be
Okay.
the completed, the whole is completed. We will be done with the discount, with the premium and every method. And by the way, I forgot, when is your homework pending?
7.
Seven.
I think 7 February.
Okay, no worries, we will do this. Let me see if I go to your homework. This question is about installment. What will be the next question? Question 5.
A straight line and effective
Just
interest.
hold on. Prepare amortizations. Yeah, this is a straight line. So we need this. We need this straight line. So let me see what will be the question number 6. The long-term liability. Prepare the effective. Okay, this is the last slides. We will do this. That issue.
And
Okay.
also our professor said this number 7 question is definitely on the exam. So I have to prepare more for that one. And also she said there is 20 question multiple choice and one question writing, and the writing question is on bounds payable that we already read it, that we already solved it in these 2 days, I think.
Okay, but okay, let's see what is the format of exam. But we will do each and everything. Wherever the question comes from,
Yeah.
you will not be bothered. We have done each and everything. We have done the straight bonds payable, premium, installment, debt issuance cost, installments, debt issuance cost, legal cost. Wherever the question is come, you can do this. Don't worry. So very quickly, if I go to the straight line method, remember, the difference between the effective interest rate method and straight line method is the calculation of discount. Is the calculation of discount. How will you calculate this table, this premium, this amount? If I go to the last question where we have calculated the table, here. So here we use the effective discount method. But if you want to calculate, if the question is straight line method, how will you calculate the straight line method? Very simple. It's a very simple. It's easy than discount. It's easy than this. You need, what you will do, you will take the difference between present value and future face value. You know, we have made an entry that debit is cash, credit is face value, which is bonds payable, and the difference between these two is discounts. So in discounts, discount is
Yeah.
debited at start, discount. Cash is 666, Tetra 633, and the bonds payable is 700,000. The difference between these two is 33367. Now, how to calculate the amortizing the discount every period? Every period, how to calculate? Normally, how do we calculate the discount? We calculate the cash interest minus the effective interest. Normally we do this, we follow this. But in straight line method, I said it is SLM short form. What you will do? You will do discount divided by the period. Now, in our example, what is discount? 33367. And what is period? Period means that how you are paying the interest. You are paying semi-annually,
Okay.
period will be 6. Period will be 6. Okay. You are paying
Okay.
monthly, or you are paying, but normally don't confuse with the monthly or annually, because I have observed one thing, that they haven't asked you that the interest is compounded monthly or annually. Always it is semi annual. So that's why focus more on the semi-annual. So what you will do, you will, in the straight line method, you will do that increase the discount value, discount amount divided by the period. So if you divide this will be equal to 5561. Now how to write? One thing remember, cash interest will be same, 42,000, but in straight line method, I raise it because it's already recorded in another video.
Yes, it's already recorded.
So how will you calculate the straight line method interest? So it's a very simple. This you will write here increase in balance. Why increase in balance? Because remember, we add discount to the carrying value. This is why it is written increase in balance. You will write same amount every period. 5561, don't need to take difference every time. It's a simpler, don't need to take difference at every period. 5561, 5561, 5561. Now, so this means that the recorded interest, so this is, now it is not the effective interest, because it's not effective interest method. It will be same, it will also be same. Why? Because if the cash interest is same, if the increase in balance is same, then the recorded interest must be same. Recorded interest must be same. So what is the formula for recorded interest? Recorded interest, remember, cash interest plus the increase in balance. Cash interest plus the increase in balance. So cash interest is 42,000
Okay.
plus 5561. So this will be equal to 47561. So this means that it will remain same every period. because it is a straight line method.
So it's just a different method, but the last answer is similar, isn't it? Like
Yeah,
this?
obviously it will be similar. It must be similar because the last answer must be similar. The reason, the what we are doing is that we are just change the way of amortization. Amortize what actually what we are
Yeah.
doing. If you notice, if you think logically, what actually we are doing, we are actually amortizing the discount only. In the discounted bond, we increase the balance from the start to the end. And in the premium, we decrease the balance from start to the end. So
Okay.
actually we are amortizing only the discounts. So that's in the effective interest method, discount is changed every period because it's an effective. But in the straight line method, cash interest is same, recorded interest is same every period, increase in balance is same every period. How you will calculate the cash interest? Face value, stated amount multiplied by coupon. How you will calculate the recorded interest? How will you calculate? I will write the formula here. Recorded interest. How will you calculate? The cash interest, cash interest plus the increase in balance. So in our example, the cash interest is 42,000 and the increase in balance is 5561. So it is Arya, it is a bit logical. If cash interest is same every period, if it is the same, if increase in balance is same, so it must be same every period, obviously.
Yes.
If cash interest is same, if increase in balance is same, recorded interest must be same. Now what to do? You will do the same format. You will increase this amount outstanding balance the way we have been increasing. First amount will be the present value. Now what you will do, it's a very simple. Now you just have to increase every carrying value with this amount. What you will do, well, you will okay, I do it with you. Triple tetra 633 plus 5561, double three plus 5561, this is 672,194. Then I will add 672,194 plus 5561. This will be 6777755. Then I will add 5561. So it is rollover. You have to just add the increase in balance and the last outstanding balance. So you can calculate only one time. Go to calculator, add on, you will reach
Okay.
the face value. I am just doing,
700,000.
yeah, 877, then plus 5561, it is 694,438. Last amount must be equal to the face value. Yeah, it is 700,000. Although on the calculator it is written 6 penta 9, 6 double nine double nine and then 9. So we will round it off to 700,000. Okay, you will round it to, or you can
Okay.
write it here like this. It will be like this. Last amount like this. If you add these two, this will be equal to 700,000. So now we have learned the straight line method. Now what is the difference between the premium and the discount? The only difference is that in premium you will do decrease in balance. The only difference is that you will do decrease in balance.
Okay.
Everything is same. You will calculate the cash interest same. You will calculate the discount same. For example, if I go to the our example that we just solved right now, Here, what was the discount value? This is 3535553. What I will do? I will 35533 divided by 6. 35533 divided by 6. This will be equal to 5922. So this means you will record every time 5922. 5922. 5922.
Yes.
Okay. So
Okay.
if we go to the homework and you can solve the question, straight line method question first. The question was, I think, 3.
Number 5. What?
Yeah, number 5.
Question number 5.
This one. On 1st Jan, this is a straight line and effective interest compared. So remember, prepare an amortization schedule that determines at effective interest rate. So first, requirement 1, you will calculate the effective interest rate method. You will prepare amortization schedule using the effective interest rate method. Okay. Then what is the
Okay.
requirement 2? You will calculate the straight line method. Do not round intermediate calculations and enter your answers in whole dollars. So this is, we normally do this. We are already doing whole dollars, right? So it's a very simple. First you will prepare the effective interest rate method, then you will prepare straight line method, then prepare the journal entries to record interest expense on June 30 by each of two approaches. It's a very simple. It's a 1, it's 2. Although the amount, only the difference will be, remember, the difference will be
Okay.
between these two amounts is always discount. Either it is a cash discount, either it is a effective interest rate method, either it is a straight line method. Difference between these two will be, either it will be the premium, either it will be the discount. So if I solve it with you, because we have time, I think. The problem is that I don't know, because I forgot to reschedule in the night. If I exit this, I don't know, they will count it 2 hours or 1 hour. You will, can you, will you,
Oh,
yeah, I don't know, because they change policy every week, every day. So if I exit the lesson, uh, you can confirm it. If I receive, if they pay me for 1 hour, then I will take another class with you, because this will be an extra for me.
yeah. So whatever you want. I don't know the how it works because this is my first time as I'm using
No
this
worries. Then as I
application.
will exit the lesson, you will confirm that you will confirm the lesson that you have studied 2 hours.
Okay. And for tomorrow night as well, can I make 2 hour appointment or no?
Yeah,
You have time for tomorrow?
yeah, yeah. We have,
8 o'clock or 7 o'clock?
no, no, no. It will be 8 o'clock. Today's just because on Sunday, the class, I have another class. It's normally rescheduled. Normally it is on 11. It is on
Oh,
11, which is my Pakistan time. Now it is at 10 in Pakistan, but normally it's on
okay.
11. So they texted me at night that they want to take class at 10. It's a very long class. They have been working with me very long. So that's why I'm sorry for the inconvenience.
That's fine. So if you want to exit the class, yeah, just exit it. So I will.
I will exit it. Then I will see that what they do.
Okay, then text me.
Okay.
Thank you.
Thank you very much. Don't worry. चाय हले तक नहीं पीती मैं। वो लगे हमें ठंडी हो गई थी चाय। आवाज ज्यादा तो नहीं आ रही थी बाहर? इत्थों तो नहीं बाहर जाती। वो बाजी सी मैं चले जाना अज। हमजा। मैं शुक्र मेरी अख खुल गई, मैं तो याद भी नहीं सी। मैं तेन ये कहना सी कि याद करा दे, मैं उठा देना। मैं कहना सी, ਮੈਨੂੰ याद ही नहीं। ਅਲਾਰਮ ਲੱਗੇ ਹੋਏ ਸੀਗੇ। ਮੈਨੂੰ ਕਿੱਥੋਂ ਆਣੀ ਸੀ ਇੰਨੀ ਜਲਦੀ? ਇੱਕ 2 ਵਜੇ ਜਾਣਾ। ਉਹ ਵਿੱਚ ਲਾਈਟ ਵੀ ਚਲੀ ਗਈ ਸੀ। ਪਤਾ ਹੀ ਨਹੀਂ ਸੀ। ਉਹ ਸ਼ੁਕਰ ਸੀ ਲੈਪਟਾਪ ਚਾਰਜ ਸੀ ਮੇਰਾ। ਹਾਂਜੀ, ਨਾਲ ਨਾਲ ਹੀ ਆਇਆ ਇਹ। ਨਹੀਂ, ਉਹ ਅਲੀ ਵਿੱਚ ਕਬਰਸਤਾਨ ਮੋੜ ਮੁੜ ਗਿਆ। ਉਹਨੂੰ ਇੰਨਾ ਬੋਲਨੇ, ਮੈਂ ਕਿਹਾ ਤੂੰ ਉਧਰ ਕਿ ਇੰਨਾ ਸੁਨਸਾਨ ਰਸਤਾ ਹੈ ਉਹ ਤੇ। ਉਹ ਵੀ ਉੱਥੋਂ ਸਿੱਧਾ ਇੱਧਰ ਆਵੇ ਨਾ, ਉਧਰ ਉਹ ਤੇ ਬੜੀ ਸੁਨਸਾਨ ਹੈ ਬੜੀ। सारे ही सुते हुए ने। शदीन कितने क्या नाश्ता करके धूप भी बड़ी तेज है ना। भाई भी इधर सुते उधर चले गए थे रात में। करंट से आ रहा है।